Welcome to XRP Economic Radar, your definitive source for the breaking developments and high-stakes analysis that define the digital asset landscape. If you've been watching the charts today, June 22nd, you know the market is standing at a critical crossroads where every move could signal the start of a massive trend reversal or a deeper consolidation phase. We are currently navigating a brief recovery window that hasn't quite been fully utilized for a major retrace, leaving many investors wondering if we are truly reclaiming the bullish narrative or simply catching a breath before another storm. This video is essential viewing because we are diving deep into the stabilization of Bitcoin, the resilience of Ethereum, and most importantly, why the current technical setup for XRP suggests a fragile but potentially explosive path forward. Stick with us until the end as we break down the specific resistance levels that must break for the bulls to take back control of your portfolio. Bitcoin stabilization is the primary focus of the global market right now, as the asset works through a complex recovery phase after losing critical support. Not long ago, we saw a significant shift when Bitcoin fell out of the $72,000 to $74,000 range, triggering a swift wave of selling that pushed prices down into the low 60,000s. However, the most significant moment on the chart occurred when buyers aggressively entered the field in the $61,000 to $63,000 zone. This strong reaction sparked a relief rally back toward the $66,000 level, which tells us something vital about the current market sentiment. Rather than the start of a full-scale bear market, major players clearly view this region as a significant accumulation zone. This interpretation is backed up by volume behavior, which has notably calmed down following the initial panic, suggesting that the strongest hands are now absorbing the available supply. Despite that encouraging reaction from buyers, the technical framework for Bitcoin remains somewhat unstable as we head into the final week of June. The asset is still trading below its 50-day and 100-day moving averages, which often act as a ceiling during recovery attempts. What was once a solid floor at $72,000 has now transformed into a significant psychological and technical barrier that bulls must overcome. Perhaps more importantly, Bitcoin recently lost an upward trend line that had been the backbone of the recovery rally we saw throughout April and May. On longer timeframes, sellers still maintain a slight advantage until those specific levels are regained. However, we are seeing some light at the end of the tunnel, with momentum indicators like the RSI. The Relative Strength Index is gradually moving back toward neutral territory after being extremely oversold, which is a classic sign that bearish momentum is waning, even if a total reversal isn't confirmed just yet. Turning our attention to the meme coin sector, Shiba Inu is currently engaged in a tough fight to bounce back from its recent collapse earlier this month. While SHIB managed to create a temporary bottom near the 0.000044 region and generate a small relief rally, the momentum is already starting to show signs of exhaustion. The challenge for SHIB holders is that selling pressure remains persistent whenever the price nears its short-term moving averages. Currently, the asset is trapped below its 50, 100, and 200-day moving averages, all of which are pointing lower and reinforcing the broader downward trend. While there is a small ascending support structure forming on the daily chart, it is being overshadowed by a much larger breakdown from a multi-month wedge pattern. For the bulls to really assert control here, they need to reclaim the region between 0.000050 and 0.000055. Ethereum continues to be a standout performer when it comes to sheer resilience, showing far less drawdown from its local top compared to many other alternative assets in the space. After plummeting from the $2,300 range, Ethereum found very strong support around $1,670 and has been building a steady recovery base ever since. What makes the Ethereum chart particularly interesting is the volume profile. We saw a significant increase in trading activity during both the sell-off and the subsequent bounce. This suggests active market participation and real buying rather than a low-volume artificial move. However, the path upward isn't exactly clear. Ethereum is facing a cluster of resistance between $1,800 and the more robust zone spanning $2,000 to $2,350. As long as ETH stays above its recent lows, buyers have a genuine chance to build momentum toward that first $1,800 hurdle. Now, let's bridge this over to why this matters for the XRP community and what the technicals are revealing for our favorite digital asset. XRP's current recovery rally is actually more fragile than it might appear on the surface, and it's important we look at the data objectively. After failing to break through the crucial $1.30 resistance zone, the asset fell toward the $1.13 region. While buyers did step in to stop a further decline, the subsequent rebound toward $1.20 quickly ran into a wall. This resulted in XRP going sideways, stuck in what many analysts call an unsuccessful recovery phase, because it couldn't generate enough power to reach a higher high. Technically, XRP is still fighting an uphill battle as it trades below its 50, 100, and 200-day moving averages. The 50-day average at 120 is the immediate gatekeeper that bulls must conquer before we can even discuss a return to previous highs. There is, however, an encouraging development for XRP holders when we look at the behavior around the recent price lows. Despite multiple attempts by sellers to drive the price further down, the asset has held firmly above the June low. This is a classic signal that buyers are becoming increasingly active at these lower price points, and that the initial selling pressure is progressively losing its steam. This type of price action frequently occurs when a market shifts from a state of capitulation, where people sell out of fear, to a state of accumulation, where smart money starts building positions. Our momentum indicators are starting to reflect this shift, but we need to see actual price improvement for a full confirmation. The $1.20 level remains the absolute key for this week. If XRP can successfully break and hold above that resistance, the path back toward $1.30 opens up, which could signal the start of a much more significant market reversal. Understanding the connection between Bitcoin's stabilization and XRP's future move is critical for anyone holding digital assets right now. You might be wondering, I hold XRP, why does the Bitcoin moving average matter to me? The reality is that Bitcoin acts as the tide that lifts or lowers all boats in the crypto harbor. When Bitcoin finds an accumulation zone, it provides the market permission for assets like XRP to begin their own independent rallies. We are currently seeing a cooling off in the massive volume spikes that characterize the earlier liquidations. In the past, these types of occurrences have often indicated market exhaustion points. This is where the weak hands or over-leveraged players are forced out of the market, making room for stronger long-term buyers to absorb the supply. For the XRP Economic Radar community, this means watching that $64,000 support on Bitcoin just as closely as our own $1.20 resistance. As we look ahead, the battle between the bulls and bears is far from over, but the ingredients for a recovery are starting to come together. We are seeing a market that is stabilizing rather than just falling, which is the first step toward reclaiming any bullish narrative. Whether it's Ethereum building its base or Bitcoin attempting to regain its trendline, the overarching theme for June 22nd is one of cautious optimism. For XRP, the objective is clear: reclaim the moving averages and turn the 120 level back into support. While the technical framework is still being rebuilt, the fact that the steep sell-offs were absorbed so effectively is a testament to the underlying demand for these assets. We are moving from a period of high volatility into a period that will likely decide the course of the next major move in the crypto space, making this a pivotal time for your investment strategy. It is truly a fascinating time to be part of this ecosystem, and we are committed to keeping you ahead of every shift in the market. If you found this deep dive into Bitcoin, Ethereum, and XRP price analysis helpful, please make sure to support the channel. Here at XRP Economic Radar, our community is built on staying informed and making data-driven decisions in an often emotional market. Like this video to help more people find this analysis, and share it with your fellow crypto enthusiasts who need a clear view of the current charts. Most importantly, hit that subscribe button and turn on notifications so you never miss a breaking update on Ripple or the broader economic landscape. We want to hear from you. Where do you think XRP is heading by the end of the month? Drop your price predictions in the comments below, and let's keep the conversation going. Thank you for watching XRP Economic Radar, and we will see you in the next update.